Hello and welcome to A Long Time in Finance with Jonathan Ford and Neil Collins, in partnership with Briefcase.News, the service that brings intelligent curation and analysis to your media monitoring. As listeners will know, A Long Time in Finance has been a puzzled spectator of the great crypto phenomenon. Neil still thinks there's something not quite right about paper currency and would prefer to go back to the gold sovereign or perhaps even coloured stones.
Very difficult to exchange a gold sovereign for a bunch of fries, but still.
Yeah. So at the risk of eliciting a volley of I told you so's from my neighbour here, we're going to have a look at the latest crypto drama. And it's a sad tale. Until last week, Sam Bankman Fried was one of the big beasts of the crypto world, with a fortune estimated at $16 billion, most of it tied up in FTX, a large crypto exchange he founded, and a derivatives trading company. Now the 130 companies are all valueless. His own fortune has vaporized, and his honesty is openly being questioned. He's considered a flight risk in the Bahamas, where his empire is headquartered, and was rumoured at the weekend to be planning to flee to Dubai in his private jet. The main virtue of this destination, the UAE has no extradition treaties with the US.
Presupposes he's still got his private jet, of course. Hasn't
I know. I agree. It depends who owns it, I think. So a bit of a moment, I think we'll all agree. And it comes at a time when a number of crypto exchanges have been crashing and some currencies also have collapsed. So I thought we'd ask, what does it all mean and where does it leave the crypto world? And to discuss all this, we're joined by crypto expert, digital entrepreneur and all-round financial guru, and an old friend of the show, Izabella Kaminska.
Hello, greetings.
So Izzy, where do we start here?
Where do we start?
What just happened?
I mean, it's all a big mess. It's such a fast-moving story that I'm sure by the time this podcast goes out, there'll be new twists and tales. Sure. By and large, we are at an existential point in the crypto narrative. Sam Bankman Fried, known as SBF.
Should we call him SBF?
Let's call him SBF.
And that's Mr. Fried.
Can't we
Fried.
call him Mr. Fried by name?
Well, we
Fried by nature.
Drop in the Frieds, but we'll go with SBF.
Bankman Fried. I think that's quite clear.
It's nominative determinism.
So yes, there's loads of conspiracy theories traveling around the crypto space, but very briefly, like FTX came almost out of nowhere and became one of the dominant derivative exchanges. SBF founded it in 2019, and I think it was in May 2022 that Mr. SBF was even hosted for an FT lunch, right? So that was the pinnacle moment, I think.
It's often when it all goes downhill.
Could I just ask a question? This is a crypto exchange.
Yes.
It's not very much like, say, the London Stock Exchange, is it?
What is an exchange in the crypto world? There are all sorts of flavors. I mean, you might remember Mt. Gox. That was the original high-profile collapse back in 2014. It was an exchange ran out of Japan, supposedly hacked. We never got to the bottom of it. It collapsed in similar murky circumstances, but it was early on. And at the time, I thought that was an existential issue for crypto, but it turns out it wasn't warning enough. And there were continuous exchanges coming up to take over the market share, the ones that collapsed left behind. But around, I would say, 2017, 2018, the big innovation in exchanges was that derivative exchanges started to become a thing. All the exchanges before that were mainly focused on spot exchange, which was very complex.
Just an exchange. When Neil talks about the stock exchange, the stock exchange is simply a venue where people turn up and trade these things.
Right.
FTX or other Binance or all the other ones, there are venues where you can trade it, but they're also custodians where they keep your bit or your token or your coin or whatever it is. Now, that's a very simple model, because let's say I put $100 into Bitcoin. I buy from somebody else a Bitcoin and stick it in FTX. It's in FTX. It just moves into my account. And Bitcoin goes to zero next Thursday. I've lost my 100 quid. It may be if all crypto goes to zero, FTX has a problem in that it can't take fees from nothing to pay its wages and salaries. But it doesn't seem that what we're seeing at the moment is very much like that very simple model. It's like everything is collapsing almost like a bank.
Well,
and having runs
Yes,
and
because
confidence crises and huge losses.
Because these exchanges are effectively broker-dealer models. So the murkiness comes in the fact that crypto as an asset is very difficult to manage. And so they pool the funds. And de facto, even though you've heard so much propaganda about being your own bank and being in control of your own crypto, the reality is that if everyone had to operate out of a segregated wallet, there would be no liquidity. So actually, when you take out a account at any of these exchanges, you are de facto funding that exchange and putting your money into a pooled account from which they manage margins, whatever. It depends on the model of the specific exchange. So the original ones were all focused on spot, and there wasn't very much leverage in the early days. But then the derivative exchanges came on the scene around 2017, 2019.
What's the purpose of a derivatives exchange as opposed to a spot, which just means buying and selling at the price prevailing at the time? What's a derivative exchange?
So like with the CME or any other, commodities are tough to trade physically. So derivatives give you advantage in the sense of liquidity, in the sense of transaction capacity and speed. Crypto is no different because it's really hard to actually, despite all the propaganda, it's actually really hard to exchange because it comes with lots of counterparty risk and hacking risk. So if you're doing a lot of exchanges,
and it costs money to
and
actually
it costs
do that.
money, right? Yeah. So there is an efficiency from using derivatives because you then don't have the exposure on the counterparty basis, and you can be sure whichever exchange is honoring the trades can step in as an intermediary, or in the case of Bitcoin and crypto, they would do these forced liquidation events if any one of the parties was too much out of the money.
But when you talk about leverage, that implies that there's also lending going on here. People are not just paying $1 for a Bitcoin and then storing it. There's some sort of lending activity going on. So is that right?
It's no different to say how CFDs operate. So the leverage is in any kind of closed system, you can de facto engineer leverage, providing you can settle these things quickly enough and ensure that things don't go out of the money too much in a market that moves. And the other issue is really the exchanges themselves. Conventionally, you have two models. You have one where you're an agent, where the broker-dealer is just matching the counterparties together and getting a commission for that match. And the alternative is one where they operate as the principal, and to encourage liquidity, they step in between the counterparties. So the counterpart is trading with the exchange, and they operate as a sort of quasi-market maker. And of course, in that case, in that model, the broker is also taking risk. Why would they be inclined to do that? Because it adds liquidity and it creates the illusion of tight spreads.
They can trade on margin. Which gives them a huge
leverage,
new toy to play with.
And makes it very exciting. I would have thought it was pretty exciting, judging by what happens to the price of Bitcoin. It's pretty exciting to begin with. But then again, I'm not the kind of excitable person they're going after. But I still don't figure, how is it then? So they are doing a little bit of CFD-like leverage, introducing it into the game to make it more attractive to trade, make it easier and quicker to trade. How then do you end up with these enormous losses? Because people are talking about, and I don't want to go into the details of SBF's little whoopsie on the carpet, but people are talking about it having 9 billion of claims and 900 million of assets. I mean, aside from the dread word fraud, how could you possibly end up with such enormous losses?
Well, number one, the clue is in the fact that SBF started his own hedge fund, Alameda Research, and that this was a prominent liquidity provider to the exchange itself, right? So remember the Volcker rule? Remember what it determined? It determined that banks should not be prop trading in their own proprietary systems, right? Because there's a conflict of interest. Now, if you are de facto, there's no proof. I want to emphasize that this is speculation on my part.
No proof, listeners.
But the conflict of interest is obvious. And so if you are not only the counterpart to your customers, but you are prop trading, you might be inclined to take risk that the market might move too quickly, or there might be some sort of Nick Leeson moment where you decide to keep doubling down just to recover a small loss. Before you know it, it becomes a massive loss.
It seems to me that the temptation to go down that particular route especially if you think you know better than the market does. You're a market maker or you're an exchange and you think, these people really don't know what they're doing. So we're actually going to trade against their position on our own margin. That seems to me to be a systemic hazard if they are allowed to trade essentially for their own book as well as trying to make a market for the rest of the world.
That's exactly the conflict of interest. So the question is, what was really going on behind the scenes? And speculating, the big rout in April 2022 on the back of the collapse of Terra Luna, which we talked about before, chances are they suffered a loss at that point and they were hoping for a turn in the market. It never came. It just kept getting worse and worse.
So Almeida, which is the trading bit, might have invested in a proprietary way in some other coins or tokens, taken losses and then basically disguise it or whatever might have happened. But that's how you end up the losses in the system.
A lack of Chinese walls, a lack of compartmentalization, lots of conflicts of interest, but also the commingling of customer funds.
And what is interesting about the collapse is the fact that the entire legal department, it's not clear who that was, apart from SBF's cat, resigned on the day that this whole shit hit the fan. And
clearly not a good
so
sign.
they obviously didn't want to hang around for the post-mortem.
Yes.
For whatever reason. So I want to pull back from the minutiae of this to, if you like, the wider question, which is, we've talked about this before, and you know that Neil and I are probably isn't this slightly reminiscent of something, an acronym SSB, South Sea Bubble? And is this not the moment in the South Sea Bubble where somebody erects their placard saying, business of great advantage, nobody knows what it is, get their £1,000, leg it to the continent at lunchtime, and it's so outrageous that basically the punters suddenly realise they've been shafted and they all start selling their South Sea Company stock. I know that you've taken the view that the investors in Bitcoin are a hardy bunch, and they're prepared to take quite a bit of a pasting and keep the faith. Is this a hinge moment, do you think?
I think this is quite an existential moment for the entire industry because it's such a spectacular fall. The other aspect of it is that SBF had achieved quite good and favourable coverage in the press. So they're going to be out to get him now too. Whereas I think all the other failures were in the context
blame the
of...
press.
Yeah, in the context of...
Everybody else does.
Go on. Sorry, Izzy.
No, the other failures have always been like, oh, we told you so. Whereas here, because, he had managed to somehow woo the collective intelligence of the press into his little bubble, I think this time might be different. Also, there's this weird, there are a lot of conspiracy theories at the moment with respect to why he was allowed to be so successful. Is it because he was secretly funneling money, crypto Ponzi scheme money into the Democrats? Because I think he ended up being the second largest donor after Soros. Then there were other conspiracy theories related to his competitor, who is CZ.
Well, I was going to ask, is the structure of CZ a similar one?
The structure, he's a person.
Binance.
The structure of his exchange, if that's what we call it.
Yes, so it is a similar structure.
So
yes, exactly.
If Mr. Fried can melt down
he's the JP
overnight,
Morgan, yes, right.
What is to stop CZ following him down the drain?
Well, it could be a question of what bigger fish gobbling up a smaller fish, or,
But I thought he'd already rejected the smaller fish on the basis that it was too many bones in it.
But the customer flow, there's still going to be punters out there potentially who are not prepared to give up. In fact, he put out a tweet today encouraging the crypto community to, build back better again and not to give up. So he's definitely on the prowl. Build back.
Marvellous.
Build back crypto
great
better.
Slogan. I wish somebody else had thought of that earlier.
It's a long haul. It's not a get-rich-quick game. This.
But it's all very well. You can understand him saying, come to me, I'm in great shape and we'll all get out of this together. But if the structure is similar, then what is to stop the same thing happening?
Well, it's an offshore exchange. It's equally opaque, I would say. I think it's important to stress that since this has all happened, there's been this massive movement of transparency. I don't know if you've seen, every exchange out there is doing this proof of reserves thing. So they're all voluntarily But allegedly, it's also very shades of Repo 105 because they're supposedly borrowing the cash from each other. It's a hot potato of excess cash going around, and they take a snapshot, go, look, hey, we've got the cash. Then the blockchain shows that the money's flowing onto the next exchange that goes, hey, we've got the cash. Who knows if there's a giant deficit somewhere in the system.
The purpose of the cash is that they have made some sort of promise to their customers. I want to come on to the customers in a second, that they can sell back their Bitcoin or whatever it is to the exchange, which is going to act as some sort of principal, so therefore has some capital which it can send out to buy back. And they do move the price, obviously, if they think it's going to be a disaster for them. But anyway, sorry.
Yeah, so the clients will have deposits at these exchanges and they expect to be made good at any time. And they don't have sort of any lockups.
When you say made good, you mean that
capacity to withdraw what they put in and haven't lost.
In real dollars.
In real dollars, yes.
So to sell back their
or in crypto.
To,
it could be in crypto. In whatever
but
terms.
If they have crypto in there, they can turn it into dollars if they want to.
Well,
is that
you
the promise?
You can have accounts in crypto denomination or in dollar denomination, but dollars would be Tether dollars, right? So it would be the Mickey Mouse.
So-called stable. Anyway, but I want to come back to, I'm a customer. I'm a customer of FTX. And I've been trading away quite happily with my little stack of Bitcoins or whatever. And all of a sudden, all this thing happens.
Dwindling
what
stack of Bitcoins.
What do I do now? Am I going to get anything back?
Well, you have to figure out...
Am I just going to have to write off to the administrator, brackets, the man who
runs the
ran the bankruptcy of Enron? So that's encouraging. So I presumably just have to put my claim before the administrator and hope there's something left at the bottom of the bucket when everything is, and it could take years.
Yeah, well, you might get 10 cents in a Tether dollar back.
But haven't we just proved that all the regulations which these guys were trying to evade, all the banking and other know your client, boring regulations, were actually serve some purpose in the first place.
You would think.
Making it less likely that you were going to end up in this unhappy situation, rather like a mid-19th century bank client whose bank has just gone bust.
Well,
I would look
exactly.
at it from the other end, from the
and you don't want to bail out from the government. Appalling.
From
that
the
would be terrible optics.
Order. From the regulator's end, the regulator might say, I really don't want to be able to regulate this, because if I start regulating, somebody further down the line, if it all goes wrong, will say, why didn't you stop this?
Yeah.
And I want compensation.
So
the
what
great
you're really
advantage
saying,
for the regulator's point of view, having no regulation, is that there's no way that the liability can bounce back onto the regulator. And I think that's quite a powerful
and that's one
incentive
reason
for
the regulators have been hesitating for a long time, and there has been this regulatory uncertainty, is because
and Fried was trying to get them to rally around.
That's one of the conspiracy theories, that he was basically creating a concord with the regulators, where a gate, as they say, so now that he's big, regulations go up so that new players can't come in to challenge him. And that's why Binance might have had a motivation to
But it's not quite the same thing as the regulators saying, if this goes belly up, we are going to find ourselves on the wrong end of those famous American lawsuits. Mm-hmm. As long as they hold out against regulating it, there's no way they can be got at.
The next thing I want to pick your brains about is, which is sort of attached to this, is they've proved that you can create in the modern world a mid-19th century bank in some frontier American state, which basically can go bust in an afternoon and everyone sits around looking rather sad with singed fingers. But this whole thing, right, this whole crypto thing, surely it must depend on a stream of newbies coming along who think, this looks like a good idea. I'm going to blue my inheritance from Auntie Ada on some Bitcoin. And aren't they going to now be a little bit more anxious about whether that's a particularly good idea? And what happens if you don't get... Because the whole idea of this industry, which is why I suppose everyone always thinks of it as a bit of a Ponzi scheme, is that it basically requires an ever wider funnel of money to come in to validate all the iffy bets that have been taken up till now.
But to some extent, it depends on whether Aunt Ada has given you the money or you've stolen it from her. If you've stolen it,
I
you
think in
might
an unregulated
be prepared
market,
to take the risk.
those issues, that is
But
an
the-
entirely
but my-
irrelevant issue.
My serious point here is that a lot of the money is essentially black money in the stuff. It comes from crime. It comes from arms
crime,
trading.
Neil.
It comes from.
Neil's not wrong, but actually
Thank
there
you.
is some evidence to say that the crime volumes have now been crowded out by the speculative volumes. I think because
Who's provided this evidence?
there are lots of agencies like Chain Analysis who spend ages scrutinizing the blockchain and figuring out where all the flows go.
I think it's a wonderful idea that the legitimate investors have crowded out the illegitimate ones.
The legitimate ones who are focused mainly only on speculation and Ponzi dynamics. But
There's
it's
law
an
about
important
that.
point because the blockchain, the transparency of the blockchain does actually hinder the criminal element. So there are all sorts of, legitimate forms of transfers as well as illegitimate ones.
Yeah, I think it's worth putting in a word for the bravest country on earth right now, which is our old friends in El Salvador. Shout out to El Salvador there. And sometimes known as El HODL-ador.
Yes.
HODL means hold on for dear life. Because
Yes.
they are, I think, the only country that I'm aware of that accepts tax payments in Bitcoin.
As far as I'm aware, yes, I think that's correct. Yes.
But to come back to the question, if the supply of newbies diminishes as a result of this, and the hoped for regulated future, more El HODL-adors coming on stream who are prepared to basically accept some sort of payment in this currency, if none of that happens, is there not a danger that this could be a hinge moment in the sense that it could all fold up on itself? Well,
I do think like 99% of this stuff is going to disappear because I don't think
99%.
And also remember, we're in a rising interest rate environment, which this stuff was born out of QE and out of ZERP, right? It was easy to have all this
Zero
crazy,
interest rate policy.
crazy sort of speculation.
Okay.
Crazy speculation when money was cheap, but now that there's a price on money, this is going to be much harder to sustain.
So what's the purpose of the 1% that survives? If it's not
I
speculative?
would say it's less than 1%. It's probably going to be 0.01%.
Okay, but what's it doing? It's not
At
going to
the
change the world.
At the margins, there are some interesting innovations, but they're very marginal. It's I did get persuaded by a few things. Like I like the perpetual futures, but they're actually not.
The what? Sorry?
Perpetual futures are an interesting thing that the
The future is always perpetual.
These
surely.
are like trading instruments, but yes,
you
sure.
never settle them.
You never settle them, but they're very interesting innovation, and
You can't lose.
Well, I'd borrow on that basis.
they're slightly different. But I won't go into the complexity of them. But some aspects of NFTs are interesting in terms of making ownership of certain watches and luxury goods. I can see some minimal aspects in that.
But what
It's
about
gonna be small.
what about okay, that's interesting. But what about your view last time we had you on, you very eloquently explained the kind of incredible amounts of punishment the hodlers were prepared to take.
They love
and
a bit of
down there in the
punishment.
financial dungeon where they've taken another pasting thanks to Mr. Fried, SBF.
Yeah.
What are they? We're now at the point where they are indeed pulling the gag out of their mouths and saying the safe word and begging to be cut down.
I think we're nearly there. I think the Bitcoiners are going to be the last to drop, but all the other crypto guys, I think, they're at the limits, aren't they?
Okay, Bitcoin the survivor. Price is currently about $14,000 a coin. Price at the end of the year, up, down.
Oh no, I think it's going down.
Certainly.
I think it's going to go as low as about 6,000. Basically back to where we were when the whole pandemic started, so about 5,000,
Okay.
6,000.
So-
Maybe lower. I hate making price predictions because
No, I think that's it was
a
a
bit
bit of
unfair,
a
sorry.
very unkind question.
But
I
can
agree.
I just talk a bit about just one? I don't want to end on a sad note, and therefore it's not all doom and gloom. In
I know what
crypto
you're going to
land.
say. No,
Oh,
nibble
really?
coin.
Listeners who've listened
Cheer
to
us
us on
up, then.
listeners will remember from earlier episodes we've adopted our own cryptocurrency on this show, which is nibble coin, and so I looked it up. Amazingly, it's still around, and it has sailed through all this unpleasantness almost untouched, and it still has a market value of $45 which is for all the 269,000 nibble coins in issue. So some currencies.
How does it compare with when you tipped it?
It's about the same.
Oh, well, there you are.
So much for being an influencer.
It's like a Rip Van Winkle coin. It just sleeps through all this horror.
You're no Kim Kardashian. That's all I'm going to say.
I haven't got it to go up, but it hasn't gone down.
That was A Long Time in Finance with Jonathan Ford and Neil Collins. Editing and production is by Nick Hilton, and our sponsorship partner is briefcase.news. Join us again next week.